discussion on the quarterly performance, followed by an interactive Q&A session. The management team will be represented by Mr. Ajay Bijli, Promoter, Founder, Chairman and Managing Director, Mr. Sanjeev Kumar, Promoter, Co-Founder and Joint MD, Mr. Gautam Datta, CEO, PVR Limited, Mr. Kamal Gyanchandani, Chief of Business Planning and Strategy and CEO, PVR Pictures, Mr. Pramod Arora, Chief Growth and Development Officer, PVR Limited, Mr. Nitin Sood, CFO, PVR Limited, and Mr. Rahul Gautam, SVP and Head of Corporate Finance. So I'll hand it over to Mr. Ajay first for his initial remarks, and then we can open the floor for Q&A. Ajay, please.
Yeah, thanks very much. Good morning, everyone. I'd like to welcome you all to the earnings call of the Q1 results of 2021. As you're aware, the cinema industry has been shut since mid-March, even before the official lockdown due to COVID-19, and therefore our results reflect the fact that we were shut throughout, and we had nil revenues during this period. So Nitin will speak more about the results, but just the headlines are this only. After adjusting for Ind AS 116 releases, our revenue was down to 12 crores, our EBITDA was down to minus 116 crores, and our PAT was down to 141 crores. Due to COVID, a lot of measures were taken by the company, short-term and long-term. There were temporary pay cuts, there were workforce reductions, and various third-party contracts had to be suspended. And we aggressively controlled our fixed cost to almost 78% reduction. We also, so basically our run rate has come down to 32 crores in the first quarter per month, our fixed cost, as opposed to 150 odd crores compared to last year's Q1. We continue to manage our liquidity. On the positive side, we were very happy that we were able to successfully complete our rights issue for 300 crores. The issue was subscribed 2.24 times, which is the highest oversubscription of any rights issue in the last 15 years. This really reflects the confidence the shareholders have got in the company as well as in the industry. We have about 550 odd crores liquidity available now, including the undrawn banking lines of 150 crores, which is sufficient to sustain our operations and meet all our obligations. Another positive news is that cinemas across the globe have started reopening, and the initial box office response is very promising. A lot of movies are lined up, and the entire Indian film industry and international film industry still have got a lot of movies lined up for the exhibition sector, and we're looking forward to that. We've obviously revised our SOPs to make sure that consumer confidence is up when they come, and we're totally committed to providing the best and the safest movie watching experience to our customers. And we're just looking forward for the cinemas to open now. Thanks very much for joining once again, and I leave the floor back to Axis to control.
So, Ankur, we can start with the Q&A.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Abneesh Roy from Edelweiss. Please go ahead.
Yeah, thanks for the opportunity. You have done commendable cost control in very tough macro environment. My first question is on the wages. So, you have cut the manpower number, and you have also taken the salary cut 25 to 50%. So, once your operations come back, would you need to again rehire more people, or it will be mostly on variable/temporary basis? And second, if you see Domino's in the broader same retail space has shifted permanently, at least in the medium term, towards a variable cost structure. So once you open up, is there a possibility that you can also shift to variable cost structure given next 6 months the uncertainties are quite high on the revenue side?
Nitin, would you like to answer?
So to answer your second question first, we are already sort of on the variable cost structure very heavily, in the sense most of our frontline staff are on the off-roll format, and so is our housekeeping and security, and that's one of the reasons why we were able to sort of suspend a few contracts. But having said that, we very strongly believe that we are a people-driven organization. We have gone down to a level which we believe will be sustainable over the next 90 to 100 days of operations when we open. So we do not intend hiring any more people. We are training our staff very rigorously on new aspects of hospitality and multitasking, so that we could sort of drive our business in a more efficient manner with the current staffing levels. So to answer your first question, we do not intend hiring any more people for the first 3.5 months, see how business sort of ramp up, and then we will take the calls further.
One question on the outlook of the business. So globally, 70 countries, the cinema screens are opened up. So what are the learnings from there? How do you get initial footfalls given India has the maximum COVID cases now on daily basis? And second, in India also, if you see, there are a lot of learnings because malls are opened up, restaurants are opened up. In some places, pubs and bars have also opened up. So from there, are you getting some learnings and imbibing that also in your initial strategy in the first 4 weeks or first 8 weeks? Anything you will inculcate there?
Yeah, if I can answer this.
Yeah, please.
Which basically, the cinema, first-hand experience of going out and watching movies is an incomplete experience till such time brand new movies don't come. So I think all over the world, cinemas have opened, more than 80 odd countries now. Initially, they were showing old films, catalog films. Then now, all of a sudden, Tenet, Mulan, all have opened, and the response has been absolutely amazing. Also, the countries which have a very good local film industry, for example, South Korea, China, who are not dependent only on Hollywood films. So India falls into that category because 90% of box office in India comes from Indian films. So we are very basically privileged and have an advantage over other countries which are only dependent on Hollywood. Those phenomenally well. So a lot of South Korean movies have done very well. Chinese movies have done very well. So I think we would take a leaf out of that. I think the response in India is going to be along those countries. And as far as COVID cases are concerned, everybody knows they are going high and it's here to stay till such time a permanent vaccine or solution comes out. But all other activities have opened. So if all other activities have opened, then I think cinema doesn't prove to be any threat simply because there are multiple case studies now done by epidemiologists and virologists and doctors, which we have shared with the Ministry of Home Affairs as well now, where actually people are sitting in a dark room most of the time out of a 2.5-hour experience and looking at the screen, wearing a mask and not talking. So other activities, bars, restaurants, you still communicate. You don't go to a restaurant to sit quietly. You communicate. So the aerosol transfer in cinemas is the least. So in the pecking order, a lot of countries have opened first cinemas and then they've opened bars and restaurants. It's only in our country there is a perception just now that, okay, this is something where super spreading can happen. But scientifically it's been proved that people do not communicate. They are quietly sitting, looking, not even looking at each other, they're looking at the screen. And therefore, and people realize that. So the moment people have started going out, even in European countries and South Korea and all that, they've realized that this is not a space where they should feel constricted or they should feel that something may happen to them. So we are just waiting for the cinemas to open, brand new movies to come, and I think everything will be fine after that.
That's quite helpful.
Like what I said, our own experience in Sri Lanka, where we've opened as well now, it's been more than a month, has been positive. So Mulan has done very well there. So when cinemas do open up and a new content and a new film comes and gets released, Mulan got released about a week ago, and people have tried to come back in. So I think the pent-up demand to come and watch a movie at a cinema is huge. And once we open and new films come out, people will start coming out.
That's quite helpful. Just last follow-up. So in Sri Lanka, if you can tell in terms of F&B and advertising, how has been the response? I'm not questioning whether it is back to normal. I think it will take some time. But how has been the initial qualitative, quantitative feedback on advertising and F&B in Sri Lanka? And in terms of the Indian content you mentioned, so if you could give us some color on Hindi and regional content next 3 months, so October, November, December, how is it?
Kamal?
Sorry.
Hi, this is Kamal. On firstly, your question on Sri Lanka, the F&B advertising is a bit early to speak about because it's just been a month since the cinema opened in Sri Lanka. But F&B is in fact clocking better than what it was doing pre-COVID because typically we measure F&B as a percentage of our average ticket price. And currently F&B is hovering at about 60% of the average ticket price, as in the spend per head is at about 60% of the average ticket price at Colombo, which is better than the pre-COVID level. So that's on Sri Lanka, very encouraging numbers on F&B. As far as coming back to India, as far as content supply is concerned, we've got some a good mix of big, mid-size and small films. In terms of big films, Suryavanshi, 83, films from Yash Raj, and Yash Raj has been extremely supportive to hold back their entire catalog and not just big films, but also their mid-size films. In Tamil, we've got Master, which is still holding its release, and they've come out publicly to say that they will wait as long as it takes for cinemas to open. Telugu has had very few films which have gone straight to OTT, namely one film which has gone to OTT, which is V. All other films have held back their releases for cinemas to open. Same for Malayalam, same for Kannada. KGF 2, which is a sequel to a very, very strong performing film, very strong franchise, KGF, which is also held back its release. And of course, there's a long slate of films which are lined up for release in November, December in the foreign language Hollywood category.
And Sri Lanka ATP was cut? That is my last question.
Sri Lanka ATP in Sri Lankan rupees is at about 750 rupees at present, which is comparable to what we were doing pre-COVID.
Okay, that's very helpful. Thanks a lot.
Thank you. The next question is from the line of Jay Kumar Doshi from Kotak Institutional Equities. Please go ahead.
Yeah, hi, good morning, thank you, and good liquidity and cost management.
Mr. Doshi, can you speak closer to the handset, please? Your voice is not audible.
Yes. Hi, good morning, thank you, and good liquidity and cost management team. Now I've got 3 questions. The first one is, rent negotiations have been underway since about 4 to 6 months. Could you please provide some color based on your discussions with developers? Or rather, what would be your base case at this juncture for the 3 phases, if I may? Phase 1, when malls were locked down. Phase 2, which is the current phase where malls are operational, but cinemas are not allowed to operate. And phase 3, which is, eventually when cinemas operate. What would be your base case? What should we build? And second is, you have fully provided for CAM. Does it mean that you are prepared to pay CAM during the lockdown period as well? So this is the first question, and I'll come back with other questions later.
Okay, my name is Pramod, so I'll respond to this query. So we have been in touch with all our developer partners, and in the first bucket that you had suggested, when the malls were closed, all the developers have agreed of, not waiving off the rent. For the second bucket, when the malls are operational and the cinemas are not, till such time the cinemas are not operational, the developers would waive off the rent component. When it comes to CAM, while we have provided for the developers would only be charging CAM to the extent of their actual outflow, which will be about 10% during the time the cinemas were closed or during the time the malls were closed. Once the malls opened and cinemas have not opened, this number may shift to about 30 to 35%. That is how we are looking at it. Does that answer?
That's very clear. Thank you. And second question is, could you please comment on sustainable cost savings? So, if, as per my understanding, your monthly fixed costs were ballpark in the range of 150 crores if I assume electricity as well as employee costs as fixed costs. Or to put it the other way, your monthly employee expense was 36 crore, which has probably come down to 12-13 crores in August. Now, this will again go up to a certain level once cinemas operate. But if you were to move back to 30% plus 32-33% occupancy, would you go back all the way to 36 crores in case of employee costs, or you think you will be able to operate at about 30 odd crores? So at an overall level, should we expect 100 to 200 basis point expansion in margins as compared to pre-COVID levels once you get back to similar occupancy? Is the question.
So I'll answer that, Jay, for you. So, the management has taken several measures. Some of the measures that we've taken are temporary in nature, consequent to shutdown of cinemas, and some of the measures are long-term and permanent in nature. Like you rightly said, some of the costs will go back once cinemas open. But in some of the costs, like employee costs specifically, we think the costs will be at least 15 to 20% lower on the long-term basis, given what we've managed to achieve. And we definitely intend to operate with much lower headcount levels in the long term, given some long-term restructuring that we've managed to achieve in the overall scheme of things. Also, some of the other expenses and overheads will come down, at least in the next 6 months post-opening. Those expenses will at least be 20% lower, 20 to 25% lower than our traditional run rate. Some of the other costs, etc., electricity and so on, will also, at least in the next 12 to 18 months, will be lower, given the fact that several state governments have announced reliefs for the industry, general industry. Post-opening, some cases, minimum load charges have been waived out. Maharashtra has reduced the electricity tariffs by almost 8% for the next 4 to 5 years. Similarly, a lot of states have taken these measures. So cost structures are definitely going to be lower. And till the time, business generally bounces back to normal, all mall operators and retailers will try and keep their costs lower. So you will see a lot of permanent cost reduction. It's very difficult to put a number, but clearly I think between 15 to 20%, especially in two heads, which is employee cost and other expenses, we think we'll have long-term cost savings.
That's again very clear and helpful, Nitin. My final question is on screen additions. Now, in the presentation, you have indicated that 30 screens are 70 to 95% complete, and another 28 screens are under fit-outs. So what would be, for these two buckets, what is the capex that you need to incur to sort of, commission these screens?
Nitin,
Rahul, would you like to answer?
I think Pramod is answering. Pramod, you want to go ahead?
No. I think, Gautam, either of you or Nitin, as per whatever we have provided for in the books, that will be better.
So let me take it. Jay, for the 30 odd screens that we are talking about, we need to spend in total, including what is currently outstanding for the work already completed, about 40 odd crores. And for the balanced 28 screens, our capex outlay will be in the range of 75 odd crores.
Understood. And, earlier pre-COVID, our expectation was adding 90-100 screens for the next 3 years. Now, if we are able to sort of, get to a normalized environment in FY22, will you still be eyeing those 90-100 screens, or you will probably be a little bit conservative in FY22 on CapEx?
No. We'll absolutely be going forward with that sort of screen count, which would be range bound to the number that you suggested, provided those sort of opportunities exist in the country in terms of the mall developers coming up with such infrastructure. And our belief is that there would be a similar or a higher level of opportunity in the coming years, especially in the coming 3 years, because it will also go in the same direction that there would be malls which have been left unfinished to the extent of 40%, 50%, and so on and so forth. So they'll all get into the market and huddle up and basically provide an infrastructure for us to put up screens.
So at this juncture, you're not seeing any permanent cancellation of any mall projects given the environment?
Not so far. In fact, whatever signings we have done, there has not been a case wherein there has been a cancellation or except for suspension, which is temporary in nature. It seems to be industry back on track.
Thank you. Thanks a lot, and we hope you get approvals to resume the business soon.
Thank you. A reminder to the participants, please limit your questions to 2 per participant. Should you have any follow-up, request you to rejoin the queue, please. The next question is from the line of Young Zuen from Tokio Marine. Please go ahead.
Hi, thank you so much for the chance to speak, and congratulations on the result. Can I just ask 2 questions? So based on all these cost reductions that have been mentioned, I think in the presentation you said that your fixed cost in second quarter has been further reduced to 25 crore, and some of the questions asked before. What's the break-even seat capacity now based on this sustainable new cost structure? That's my first question. And second question, is there any discussion about monetizing some of your content through the through third-party OTT platforms, given just the uncertainty of timing as to when the cinemas can restart, and and with all the new cases as well, whether that timeline is being pushed back. That's the 2 questions I have. Thank you so much.
So I'll answer the first question. I didn't get your second question clearly, but I think it was relating to OTT. So I'll request Kamal to answer. See, given the short-term cost reductions that we've kind of currently achieved, our endeavor is to try to achieve a break-even between 18 to 20% occupancy levels, which was earlier around 23 to 24% occupancy. With the lower cost, we aim to try to break even at these occupancy levels. Your second question on OTT, Kamal, will you take that question?
Yeah, thanks, Nitin. So as far as the exhibition business, which is our main bread and butter business, we license only theatrical rights from the producers and distributors. We are not the right holders as far as OTT or streaming platforms are concerned. But PVR Group also is also a prolific distributor of foreign language and local language films. And there, specifically for foreign language films, we also have streaming rights. We also have television broadcasting rights. And those we continue to license. So that's business as usual. That's been business as usual even in COVID.
I see. Okay, so for the traditional films, those rights for the Cineplex and the rights for OTT are separate. And you're saying that you are unable to monetize those rights through a third-party OTT platform, even if you wanted to, in the interim period when there's basically zero demand, and with COVID cases rising, it's not clear when the cinemas will open. Is that the right way to understand this?
I think the right way to look at it is that as exhibitors, we are cinemas as only theatrical rights to exploit. OTT or streaming rights are left with the distributor or with the producer. PVR Cinema doesn't have those rights to exploit.
Okay, thank you so much. Thank you. All the best.
Thank you. The next question is from the line of Harshit Toshniwal from Premji Invest. Please go ahead.
Hi. Am I audible?
Yes, sir, you are.
Yeah, thanks for the opportunity. So two questions. One carrying forward from a previous question on rent specifically. So we agree that maybe the rents in the coming quarter might also look very similar to what it was this particular quarter. But going forward, how do you see that this rent cost moving? They're typically at 2,500, 3,000 rupee per seat average per month. Are you talking to developers about changing this to a purely variable model? If you can throw some light on how that can look. And second is that what have been the interactions with the regulators on the opening date? So obviously, where are we in the conversation cycle, and how are the expectations at this point of time?
Okay, this is Pramod. I'll answer the first question, and the second one would be taken up by Kamal. In terms of the rental, you're talking about the future outlook. Yes, we are in touch with our developer partners to come out with a model which can be more variable than fixed. But our overall objective would be that we should be able to get to that 3,000 rupees per seat per month sort of a rental, getting on from our revenues. If we are able to make those sort of revenues, then we should be able to provide 3,000 rupees, whether it is in the form of a variable or in the form of a fixed. But yes, we are gunning towards getting more variable than fixed.
Thanks, Pramod. This is Kamal. On the second question that you asked, we remain in active engagement with various government ministries, and the government has been extremely supportive. We presented all the information that they have sought from us. We've shared our SOPs. We've spoken in detail about what's happening in the international market. The decision is for the government to take, and I don't think we'll be able to speak on behalf of the government. But all we can say is that we remain quite confident that end of September, when the government announces Unlock 5, we remain extremely hopeful and also confident that cinemas would be included in the announcement. That said, there is no commitment or instruction from the government as yet, so we'll have to wait till the announcement at the end of this month.
Okay, got it. And one last question, if I may use it. On the EBITDA, so clearly we had around 115 crore of EBITDA loss in Q1. Now, I understand you talked about the cost and the revenue build-up, but should we see that this is the peak EBITDA which we'll try to manage for the next few quarters? Are we targeting it that way also?
So if you look at our, presentation and the guidance that we've kind of given, our Q2 fixed costs are likely to be lower than the Q1 fixed costs. So EBITDA loss in Q2, since we are shut, is likely to be lower because of incremental cost reduction measures that we've taken. But hopefully, once we open cinemas, things will change, and a lot will depend on how our occupancies build up and how some of the post-opening costs are reflecting, and how much time does it take for us to ramp up. So it's difficult to give an answer. I think first 60 days post-opening are likely to be the most trickier one, because it will take time for occupancies to ramp up. But I think after that, we should quickly hit the break-even level and then move on to the positive territory.
Got it. Thanks a lot, sir. All the best.
Thank you. The next question is from the line of Swagato Ghosh from Franklin Templeton. Please go ahead.
Yeah, thanks for taking my question. Sir, you mentioned about Tenet. So if we look at the data closely for Tenet, the US Labor Day weekend opening has not been very great. So if a similar situation arises for fresh content in our country, and obviously in that case the cash burn might actually increase for us. So what is the plan B in such a situation after reopening?
If I can answer this, is Ajay. As I mentioned earlier in my opening remarks, the question that was asked to me earlier, that India is not a Hollywood-dependent country at all. I mean, Hollywood makes about 100, 120 odd movies in a year, And India, through our system, about anything between 1,000 to 1,200 films go through the system, and 90% of the box office collections are from Indian films. Secondly, we are all spread out. If you look at the presentation, you'll see that bulk of our screens, around 200, are in the south. We have equivalent amount of screens in the south, west, and north, and a little bit in the east. So we have our very diversified content gets played in our cinemas. So, Tenet also it opened in fits and starts in America. Not everything opens straight away. So I don't think it's a right comparison to compare US to India at all. We have a lot of films coming of South India, a lot of movies from the Indian film industry, Hindi film industry. So I'm not worried if Tenet is something that hasn't done well, but Kamal will tell you exactly the numbers. But whatever I read, $200 million it has already done over the. Kamal, what's the collections of Tenet already?
It's crossed 200, and I think you've summed it up really well. Tenet is done exceptionally well in the international markets. In most of the markets outside of US, the film has exceeded all expectations. Also, the director of the film, Christopher Nolan, is known to make films which are not, which don't open big, but they tend to have very long run at the box office. It could be one of those in US, and frankly, time will tell whether it's one of those or it continues to underperform. But internationally, the film has done exceedingly well.
Yeah, and I don't think that Labor weekend probably is a good benchmark because there was so much, warning that came from doctors and virologists in the US to be extra cautious on the weekend. So I think maybe people may have avoided going on that particular weekend. And there's also other issues facing the US like, fires and all the rest of it. But as Kamal said, his movies do have long legs, and it's very early to sort of give any judgment on its box office.
No, point well taken. But the second weekend numbers are actually down quite sharply for Tenet. But what I meant is what Tenet is for US markets, maybe Suryavanshi or 83 is to the Indian market. I did not mean specifically Tenet's performance. What I wanted to understand is the expectation that we have that fresh content will bring people to the theaters, without any second consideration. If that does not happen, so after reopening, if we come across that situation, can we then again stop and then maybe start again after maybe the whole virus thing has subsided? I just want to understand that bit. That what is our plan B on that front? If fresh content does not do the trick as we are expecting.
So as I said earlier,
we are in a business. Yeah, sorry. Yeah. We are in a business where we keep getting new content every Friday. And it's happened in the past as well that some big touted films don't do open so well at the box office, but that doesn't sort of change the business model. Consumers come, and today you also need to understand that we are no longer in just a business of showing movies. We are in a business of out-of-home entertainment. People like to come and spend time at the cinema. Content is, of course, very, very, very important. However, there are many other aspects to now a movie watching experience. So as long as there is content, big or small, this is a part of our business that some movies will do well and some won't. But that doesn't mean that we need to take a step back. We only keep moving and wait for another 7 days for the next big film to come. So that's how we run this business, and we see no change there at all.
Also, to add on to what Gautam's saying, if your question is, will we look at shutting down the cinemas again and then reopening later? The answer would be no, because, we have to sustain. As I said, first 30 to 60 days could be slightly more tricky as we build confidence among the consumers to step out of the homes. What we are seeing in terms of initial signs in shopping malls, especially in a lot of states, the traffic build out is really improving every consequent week. So every week the consumer confidence to step out of the home is getting better in most of the micro markets in the country. And I think we will have to go through that process. Obviously, we'll be beneficiary of the fact that already a lot of people have begun to start getting into shopping malls, and we will try to continue with that. And if occupancies are lower, I think we will have to focus on managing our costs slightly better in the immediate short term, rather than thinking about shutting down cinemas.
Okay, that's very helpful. Thank you. And second question, a quick clarification. In the last month, there was a small multiplex chain which was up for sale as part of the NCLT process. Can you disclose any details on that, if you participated in that, or were we looking into that deal at all?
No, so I can say that we have not participated in that chain, in that NCLT process or bid for that chain.
Okay, thanks.
Thank you. The next question is from the line of Vikram Ramalingam from Maybank. Please go ahead.
Yeah, thank you, sir. My question is, I'm sure the theaters will reopen soon. Do you believe that the reopening will be all across, or do you think it will start from, say, areas or cities where the cases are low? So typically tier 2, tier 3 cities where the cases are low. And if that is the case, where places like Mumbai will see only a gradual or a later reopening, do you think it will be slightly to our disadvantage, because a lot of our ticket sales or footfalls are from the top 3 or 4 cities, and I mean, would that affect us negatively?
Can I just say something here that I answered that earlier also, that in the pecking order from a super spreader or something that transmits this disease, cinemas come way below restaurants and bars and hospitality and airlines. So that is what we have been able to convince, or at least are talking to various state governments, and with proper studies. Because as I said earlier, cinemas are a place where people don't talk, they don't communicate. If you're wearing a mask and you're looking at the screen, you're not talking, therefore the chances of the virus spreading is much lower than places where you're looking at each other and talking. Okay, so from that point of view, the government is getting convinced now. Having said that, the Ministry of Home Affairs has to give a, as Kamal said, by the end of the month, hopefully, when the Unlock 5.0 is announced, then the state governments will take a view. But my feeling is, because they have opened all over the world with various leisure activities and outdoor activities, it will open in one go, but states will take their own decision, which we don't have control over. But it won't be a function of where cases are high or cases are low, because wherever cases are high also, other activities which are much more vulnerable, have already opened.
Okay, fair enough, sir. So my next question was on F&B. A lot of companies are facing supply side challenges with respect to F&B now. Do you foresee any when you reopen, or that has all been taken care of?
That's all been sorted. We've got very solid logistic partners, and we've got a backing of, we work with very large F&B players, and we don't foresee any of those problems at all.
Okay. All right. That's it from my side. Thank you.
Thank you. The next question is from the line of Naval Seth from Emkay Global. Please go ahead.
Yeah, I have 2 questions. One is continuing with the last one. As you rightly mentioned that first central government will come up, whatever the decision is on cinema opening, and states will accordingly take into account those things. But have you sensed any different undertone, while interacting with various state governments and central government? Because 60% of the cases are in 5 large states which contribute a decent chunk of box office collection.
No, we've not, we've spoken to state governments. The state governments have all directed us to MHA, and the response has been pretty encouraging. They're just waiting for the Ministry of Home Affairs to give the direction. And after that, the response has been quite encouraging from the state government. They can't take any decision unless they get a direction from the center. But as I said, now opening of activities has become agnostic to cases. Otherwise, why would you have restaurants, bars, hotels, airlines, all that opening?
And metros also, which have opened now all over.
metros have opened, so many things have opened. So I think that point has been driven home and everybody's understood it, that why should cinemas be singled out and correlated to cases only, whereas all other activities also which are correlated to cases, those have already opened. So I think this is a discussion about a month ago, but now I think everybody's reconciled to the fact that the economy has to open up and the sector has to open up.
And as you had mentioned that as consumer confidence is moving up and people moving to malls has been kind of encouraging. So have you got any data from the mall owners or the large mall owners where you have screens? How or what, in percentage terms also month over month, how things have improved in terms of footfall?
Yeah,
I mean, has it doubled? It is still, say, only 20% of pre-COVID. Any numbers to throw over here?
I don't have any numbers. Pramod can throw some light, but we are joined at the hip with all the mall owners, as you know, so to speak. But even in the malls, restaurants took their time. The government had a restriction of 9 o'clock. The government was not out. The liquor is getting time, cargo has gone. So as retailers, mall operators, some have settled their rental issues, some have not settled their rental issues. So as the unlocking and more of these activities as well, the footfalls are increasing a proportion to that. So in a way, it's very good for us because all these issues are resolved. Restaurants are opening, bars are open, liquor is being served, retail outlets are open, and now we'll be opening. So I think it's pretty ripe for us to open, and as I said, the numbers are only going up. It's difficult to compare month on month because every month there was a restriction, which restriction has gone away now, and so I think it's only going up. Some of the weekend numbers are quite encouraging even without cinemas.
Understood. And last question is on industry consolidation. If you can share your insights, on single screens and as well as smaller chains with few count of number of screens. Is there a clear sign of consolidation happening? Not from you participating in M&A, but either permanent shutdown or you are seeing a lot of challenges for them to reopen, once it is allowed as well.
It's very fragmented.
Can you go some?
It's very fragmented, the industry. I mean, you have 3 or 4 multiplex chains which are representing about 3,000 odd screens, and then you have 6,000 single screens. So difficult to have, and all the single screens, 6,000 single screens will have 6,000 owners. So it's difficult for consolidation to, happen the way it has happened in America and all, because there are only a few chains which are representing 40,000 odd screens. I don't know, Kamal, would you like to add something?
I think Mr. Bijli has covered it quite well, but I would only add to the extent that the pandemic has certainly accelerated the need for consolidation. The market is extremely fragmented, but it was consolidating in any case in a gradual fashion. But this pandemic looks like it's going to accelerate that process. That's our sense. We are not actively engaged in any conversation at this point, but our sense is that once cinemas are allowed to reopen, maybe in a month or so, you would see some action in that direction.
Understood. Thank you, and all the best and good show on cost management.
Thank you.
Thank you. The next question is from the line of Samir Arora from Helios Capital. Please go ahead.
So I had one question, that if on a scale of 0 to 100, how much % do you think your business has been disrupted? If there are 6 or 7 OTTs and they're all buying content and people have limited amount of time, plus there's a limited or a shorter window now between hall and going to OTT, at least in US. Because you guys seem to feel that it's all temporary, even if it's for 1 year. Do you think there is no big picture disruption?
Because OTT was always there even before cinemas were shut down, and we're comparing a shut shop with an open shop, which I don't think is fair. And windows haven't reduced anywhere in the world. It's only that some movies have gone directly to the OTT platform only because cinemas are shut. Once the cinemas are open, for economic reasons, nothing to do with a self-fulfilling prophecy because we're in the exhibition business, but purely from economic reasons, the filmmaker, 60 to 70% of the revenues of any content that gets created comes from theatrical. So most of our conversations, all of our conversations with producers in India, studios in Hollywood, are only pointing to the same direction. They're waiting for the cinemas to open and then monetize their content the way it has traditionally always been monetized, wherein the first distribution platform is really the cinema. You pay the movie out there, you maximize your revenues. It sets a benchmark for other windows, other channels where the content can be monetized. And those channels also wait for the box office collections before they can put a price to it. So it is very difficult for today. The OTT players went ahead and bought content because shootings were not happening, even of their long-form TV shows. So they also didn't have any content. They also did not have any sporting activities. So many channels, cricket, all that was not going on. So they wanted some content. So they went ahead and bought. Similarly, the producers also didn't have the cinema channel, so they went ahead and sold. But currently, the moment the cinemas open, there is no disruption that has happened to the window so far. And the normal run or the journey that content goes through, theatrical first, followed by OTT, followed by satellite, followed by airlines, hotels, all that other stuff, or TVOD or SVOD is what is going to happen. I don't think 6 months or 7 months production are going to change the way that this industry has been working for, decades, multiple decades.
Because practically time is also limited. Forget about money. And the second thing is, what about, okay, we agree that 1983, everybody may want to see in a hall or Nolan's movie. But what about the tail? How much % of the revenue comes from movies which are, $4 million cost or $5 million that somebody can buy and show it on Netflix or Amazon? Not every movie is a big movie. I agree that everybody says, big movie you have to see in the hall. What about a smaller movie, which you are still going to the hall these days, overgoing? Because practically the thing is, I think you should go a little bigger picture. If practically there are going to be 6 OTTs, how does it work unless you say that those OTTs will fall off? Because if the time is limited, forget about anything else. But anyway, that's your point.
Asking me a question, answering also yourself. So,
I'm saying I'm trying to prompt you that the thing is that explain in that context that how does it work out in the end that there are these 6 heavily or 4 at least well-funded OTTs and then these chotu-motu OTTs. How does it work out in the end? What I'm saying is your growth plans and all, you have to think of all the, not just bulldoze into it. That's all I'm trying to say. But now I
No. And definitely we are not going to bulldoze into anything. But I just want to tell you that first of all, the good news is that people are not just coming and seeing blockbusters at the cinemas. If you look at the last 3 years box office collections of India, what you call sleeper hits, smaller movies for lack of a better example, of Ayushmann Khurrana, Rajkumar Rao, people like Vicky Kaushal, Taapsee Pannu, Vidya Balan, these kind of movies, smaller films, Razi of Alia Bhatt, are the ones which have done well. So that's the beauty of the Indian market. I don't want to compare it to the US just now, because India has so much quantity of movies that are coming in that even if one big movie doesn't come, people still, a smaller movies makes up for it. And these are all movies which have done 100 crore plus. So budgets may be small, but the revenues have been amazing. Secondly, again, Indian market. Again, India is a very peculiar market. Number one form of out-of-home entertainment is movie going. 1.45 billion tickets got sold before the cinemas shut down last year. So people still find that for a small ticket, other activities, leisure activities which may be expensive, traveling, going to hotels, going to holiday resorts, buying expensive things, all those take a beating. But after a recessionary period, a small ticket entertainment which gives you 3 hours of escapism has always done well. Historical evidence has always shown that. And I continue to believe, because with all the surveys that we are getting, number one out-of-home entertainment for Indians is going out and watching movies. And people are not designed to remain at home. People are fatigued. They are fed up of being at home. And therefore, I believe the 2 engines which have always made our business work, one is the film industry, relentlessly coming up with a lot of movies, and the other is the Indian consumer wanting to get out and consume movies. These are the factors that have helped us survive pre-COVID. They will also help us survive post-COVID, is my belief. As far as OTTs are concerned, they have deep pockets because they're very judicious in the way they spend their money. Nobody can have deep pockets if you don't know how to spend money. So they know that they cannot pay an arm and a leg for every content that gets made. They wait for the box office results. They wait for otherwise you could have a movie that completely bombs and they would have paid a lot of money for it and nobody's going to watch it on their OTT platform either. Therefore, the harbinger or the benchmark for any movie content, both box office collection as well as consumer reviews, is always theatre. It has always remained theatre since time immemorial and will always remain theatre. That's the time the other platforms which have to buy content, then they decide, okay, this movie did well and now this is how much I'm going to pay for it. So, however, if the movie is only made for OTT or if a TV show is only made for OTT, that's a separate question altogether. I'm only talking about movies, 1,000-odd movies that are made for theatres in India. Their benchmark is set only after they're released on the big screen. Nothing is indicating to us by having deep conversations with producers, content makers, nothing is disrupting that in the 6 to 7 months of shutdown.
Can I add something what you just said, Mr. Vijay?
Yes, yeah.
Sure. 3 points. One is cinemas have an experience or they offer an experience which is hard to replicate. The reason I say that is that even pre-COVID, streaming has been around for a long time in US, and in India, pre-COVID, streaming was really aggressive, super aggressive in the last 3 years, 2017, 18 and 19. So if streaming had to replace cinema going, streaming is definitely replacing something. Probably is broadcasting or probably is reading a newspaper or spending time with your family. Something is certainly getting replaced, but it's certainly not cinemas, because if streaming had to replace cinemas, it didn't have to wait till COVID. Netflix and Amazon have always had deep pockets. Disney Hotstar is always been very focused on India as a market, very special market for them. And then there are a bunch of smaller players who probably at this point are finding it tough to sustain. But these three definitely have deep pockets, and they've always had deep pockets. So if this replacement had to happen, if consumer had to substitute their time that they're spending in cinema with streaming, it didn't have to wait till COVID. It would have happened much before that. So this is where the confidence that this displacement of time or, streaming becoming a high priority entertainment area for customers seems to be a temporary phenomenon and not a permanent setback for out-of-home entertainment. Second is producers, the content suppliers. They will go wherever the customers are. It's commerce at the end of the day. If cinemas can throw money on table, it's in producers' interest, content creators' interest to have more formats, more distribution channels, and not less. So a producer is more happy if there is cinema, streaming, television, even DVD, even YouTube, which is AVOD, advertising VOD. So producer wants more and more platforms because they have more opportunity to slice and dice their content. So it's in their interest to have cinemas up and running and prospering, because in Indian context, we are still terribly, terribly under-screened. Third is that there is a positive cycle at play. If you look at the last 3 years pre-COVID, cinemas have done their best business, best box office in the last 10 or 15 years. And this is the time which coincided with streaming becoming extremely aggressive, throwing top dollar at acquiring content as well as acquiring customers. So clearly the money which is going into the film industry from streaming platform, whether it's 2,000 crore or 2,500 crore every year, is going into making bigger and better and bolder films. And that is getting people back to cinemas, because ultimately when those films get made, they come back and release in cinemas. So there is also a positive cycle at play, which is slightly counterintuitive to see, to acknowledge. But because we are in business and we can sort of sense it, that in the last 3 years, streaming has in fact aided the growth of cinema and not acted as a substitute which was cannibalizing cinema. That's been our reading. So this is an addition to what Mr. Bijli said.
Okay, thank you. Best luck.
Thank you. We take the next question from the line of Deepak Mehta from MetLife Insurance. Please go ahead.
Hello.
Mr. Mehta, can you speak closer to the handset, please?
Yeah. Good afternoon, sir. So my question is that, is there any SOP you have prepared? So what will be the frequency for show? It will not be, pre-COVID level, I think, due to sanitization and all the procedures. If you can throw some light on this.
So while we are waiting for the government to come up with their set of rules, regulation and SOPs around it, but what we have planned is that we are giving extended gaps between each show. We need roughly about 10 extra minutes to do the deep sanitization, which will be taken. And beyond that, you would have seen our videos and communication that we would have sanitization, masks, shields, UV cabinets. All of that is being already ready and ready to be rolled out across all cinemas. But as we await for the final set of SOPs from the government, which we'll sort of completely adhere to going forward. But in terms of gaps, as I said, we will have about 10 to 15 minutes of additional gap between each shows. That's all we need.
Okay. And my second question is that about the consumer demographic. So do you have any breakup of how many by age-wise, what is the revenue breakup? Because I think the older population and maybe, young children will not be coming to theater, and most of the folks will be from college group or maybe young working professional.
If you look at, the broad breakup of our consumer, almost 75% of our customers are less than 40 years of age. So that is the bulk of the demographic anyway for us. 75 to 80% of our consumers are less than 40 years of age. So I don't expect that will have a material impact. Yes, some of the elderly population above the age of 60, 65 years may choose to stay away from cinemas in the initial few months. And that's likely to happen, but I don't think that's a material part of our customer base anyway. So we don't expect that to have a material impact.
Okay, sir. And any plan or strategy to show some sports events such as IPL in case of, no movie release, no major movie release?
No, not
we are in conversation, but we haven't really got any confirmation so far.
Yeah, and besides, there is a lot of new content. I mean, I don't think content, either Hollywood, there's some Hollywood movies that are lined up, it's not big ones, but medium-sized ones, Hindi and regional. So I think content will start flowing in once we open, and we're not looking at any other sporting event.
Okay, thank you, sir. Best wishes for the coming quarters.
Thank you.
Thank you. Take the last question from the line of Anurag Dayal from HSBC. Please go ahead.
Hello.
Hello.
Please.
Yeah. Thank you for taking my question, sir. The first question I have is that now we expect occupancy to be a little low when cinemas open. So has there been any push from the producer distributor side to increase the revenue share or maybe lower the window, maybe temporarily till everything is normalized?
This is sensitive information. Most of our discussions with the content suppliers are confidential in nature. We would not be able to comment on it. That's all we'll say at this point.
Okay, sir. And second question is, basically the content flow also could be a little low when it opens. So is there any, I know it might be sensitive as well, but is there any talk that some of the movies which have already been released on OTT and they might look for a theatrical release again? So are you considering those as an option?
So content flow is expected to be steady. Yes, it'll be uneven in the first maybe 3 to 6 months, but is surely expected to find its rhythm back, after the initial phase of reopening is completed. On the second part, no, there is absolutely no intention to play a film which is released on OTT or television or any other platform. Cinema has enjoyed this unique, exclusive window for decades, almost a century. There is absolutely no compromise on that. So a film which is released on streaming or television, we would not be releasing it in theaters.
Okay. Thank you, sir. And just one last question, just wanted to squeeze in. In Sri Lanka, there's been very encouraging signs. So I just wanted to check how much has been the occupancy there, the rough figure, and how it was before pre-COVID. I mean, has it already touched that, or there's still some gap?
Early days, we've just had 2 brand new films which have released there, which are Mulan and Tenet. The occupancy, I would not get into specific numbers at this point, but is close to about 65-70% of pre-COVID level, showing extremely encouraging trends. Our ATP is a similar number as pre-COVID level, as I shared earlier. And SPH has been, in fact, much more than what we expected it to be. SPH's spend per head has been much more than the expected number. So we are at about 65-70% level, as and when there is a brand new film.
Thank you, sir. It's really heartening to know that, and all the best.
Thank you.
Thank you. Ladies and gentlemen, due to time constraint, that was the last question. I now hand the conference over to Mr. Ankur Periwal for closing comments.
Thank you everyone for participating in the call. I hope all your questions got answered. Gautam, Nitin, would you like to add any closing remarks?
Yeah, thanks, Ankur. I hope we've been able to answer most of the questions that everyone had. In case we've not been able to address any specific queries, I would request you to reach out to me or my colleague Rahul Gautam, and we'll be more than happy to answer your query. Thank you very much.
Thanks, Nitin.
Thank you.
Thank you so much.
Ladies and gentlemen, on behalf of Axis Capital Limited, that concludes this conference. Thank you all for joining us, and you may now disconnect your lines.